Hi everyone, welcome to the Advanced Technical Analysis to my YouTube channel. Today in this video presentation, would like to explain about the State Bank of India on NSE exchange, symbol registered as SBIN, in-depth analysis wise technical analysis, what exactly the chart pattern has formed and moving averages. Recently, the price has taken the supported important exponential moving average and the candlestick pattern, simple moving average, exponential moving average, Fibonacci levels about the SBIN, pivot points, double top, double bottom that has recently formed on the price action on the SBI daily chart that has been observed in the both in this SBIN stock. In addition to that, would like to combine the daily support and the resistance price levels that help us to trade safe and minimize the risk and maximizing the profit. If you like this video, please press the like button and subscribe to this channel to get the more latest and strategies that help you in the trade success. Let's not waste much of the time. Before entering into main discussion part, I request everyone to pay attention to the disclaimer. This content is designed simply educational and informational purpose, not recommendations or tips offered to any of the person, group, individual with regarding to the stock, future and options. Before taking any trade, please consult your financial advisor or investor or do your own individual research. We are not responsible for any kind of the profit and loss occurring by usage of this video presentation. Now let's begin to the main topic. Technical analysis is all about the trying to find out the best fit or methods that are currently working in the market. There are various methods from the basics support and the resistance level identification to the complex level. Recently, the SBIN stock price after hitting the high of 363, SBI has been corrected to the 336 kind of the price levels where it is a key support level is seen and there is a double bottom has formed around this kind of the levels and bounced and formed a double top and the doji kind of the candlestick around 361.25 recent close, and around this 363 it has formed the double top, and around the 360 around the 336 around the price levels there is a double bottom, and around the 363 kind of the levels it has formed the double top kind of the patterns. If you observe over here, just observe the cursor movement. This is the last of the Friday day closing. The closing is at 361. If you observe over here, this is a doji kind of the candlestick. What is exactly the doji kind of the candlestick? Doji is an indecisive kind of the candlestick is formed with a single candlestick. In Japanese language, the word doji means no change. Deriving from that, a perfect doji means a candle with the same opening and the close price is the same. In the present scenario, we can identify the candles with a small body appearing thin line as a doji. The shadows can be of the any length. Doji provides the important information about the market sentiment based on the type where it is occurring. Usually doji candlesticks it is indecisive or the fight for the position between the buyers and the sellers. Price may move above and below the open price during the session but simply closed at or very near to the open price. The conclusion is that either the buyers nor the sellers were able to gain the control and the result become a draw. There should not be any color of the candle. Hence, you must not take into the consideration the color of the candle while doing the technical, as in the case of the very thin body and the double bottom. Double bottom forms when the price makes a low within the downtrend and then pulls back to the upside. On the next decline, the price stalls near the Here the price low, rally above the pullback high, it called a double bottom because the price stalled in the same area twice. It is not exactly, somewhat little bit ups and downs is also adjusted. Double bottom, not exactly always, you cannot imagine the same kind of the levels. If you observe here, this is the 338 kind of the level. Here it is 336 is the price. So here if you observe over, it is around the 332 and 332 in around the area. So it is almost a double bottom. The double top. Double top is the frequent price formation at the end of the bull market. It appears as two consecutive peaks of the approximately the same price on price versus time chart of the market. The two peaks are separated by a minimum in price valley. The price level of the minimum is called the neckline of the formation. The formation is completely and conformed when the price falls below the neckline and further or future price declining likely. The double top pattern shows the demand outpacing the supply bias predominantly to the upside. And moving on to the next, this is the, if you observe over here, it is almost a symmetrical triangle formation. Almost, it not exactly, but similarly, for just an example I am showing. From here, if you observe over here, the 265 kind of the levels, it has formed the higher top, higher bottom, higher top and higher bottom kind of. Here's a gap in between them around 330 and 320 to 330. There is a price gap. What is the moving on to the next slide is the simple move exponential moving average 20. The line, just observe the cursor movement. This is the exponential moving average 20, and if you observe over here, it has taken the support from the exponential moving average 20 around the 342 kind of the price levels. It has crossed from there and formed the 363. What exactly is the exponential moving average? Before that, I would like to in short explain about the moving average. Moving average allows you to visualize the price action for a financial instrument over a period of the time. It is widely used in technical analysis and referred to as a lagging indicator, and it's based on historical price. The two commonly used average in the market is simple moving average and exponential moving average. The simple moving average is the simple average of the security price over a specific period. The exponential is similar but attributes the greater weight to make the recent price. The primary signals, when it crosses about the 20 days, it indicates the bullish crossover, and that provides the likely increase in the buy signal with volumes. Just check the volumes. I keep on telling one thing, it is not immediate in the when the market next day it opens, you have to go and buy at the current level. You have to do the research and observe the price movement and where exactly the volumes are building, then only take the enter. It does not mean market always gives the opportunity to find the current levels or opportunity to entry and exit. Always keep remember and understand the candlesticks, what exactly it is telling to us. That's the more important. Now moving on to the next slide is that if it crosses, currently it is around 361 and the previous the resistance is around 363. If it crosses below and the further, and keep in mind 341, 340 to 342 is the support level. If it crosses below 338 is the another kind of the support level. As you observe, these are the recent bottoms, and here this one the recent tops. Top of the resistance line and the bottom is the support line. And this is another example, classic example of the Fibonacci. What exactly the Fibonacci levels are drawn, or it clearly indicates us the support and the resistance level for the future. If this crosses, the next target based on it is the 370 to 374 kind of the levels. If it slips below, there is the previous top is around the 348 or 349. Always keep remember the previous top acts as an resistance and the previous bottom is acts as a support kind of the levels. Moving back to this is the pivot levels. The pivot levels gives us the clear picture and the idea, the support and the resistance for the daily, and based on the what the time frame you have selected, You can see the support and the resistance are based on the time frame what you have selected. What is the pivot table? A pivot table is calculated as an average of a significant price, high, low, and close from the performance of the market in the selected time frame. If the market in the following period trade above the pivot, it is usually elevated as a bullish sentiment, whereas if it trade below the pivot point, we can assume as an bearish. I believe in a combination anything everything that can helps in increasing the trading accuracy. So how the forecast using the advanced methods for such of the simple method combined together. So this is the simple moving average and exponential moving average. I suggest always kind of this. This I'm sorry here this is the pivot level, not exactly the SBIN. This is the Nifty's pivot level, so kindly ignore at this point of pivot levels. Just consider the simple moving average and exponential moving average. This is the 5 days, 10 days, 20 days, 50 and 100 days kind of the levels. Just keep one thing in mind. At this or the price level, you can see some kind of the buyers try to pull the price in the upside, and some kind of the tough fight between the bulls and bears. And this is the period over the 1 week and the 1 month. The price has gained from the low of 349 if you consider the time frame 349 for 1 week, and the high is 365. 1 month low is 334 and the high is around 365. So this is what about the SBIN weekly price action analysis in depth. Thank you guys. Thank you very much. If you like this video, please don't forget to subscribe to this channel. Thank you. Have a good day.